Hey everybody, my name is Jamal Malik, and in this video, we're going to talk about the recent price cuts to all of Tesla's vehicles. Now, there's been a lot of speculation as to why they actually decided to do this in such a haste manner. People have talked about, is it because of increased competition? Is it because of maybe losing money or customer demand? Is it because they have more efficiencies in how they're manufacturing their cars? Well, we're going to dive in to their latest financial documents and try to understand exactly what's behind some of these changes. So the first place we're going to go is their latest 10K and 10Q. So let's look at their financials. This is a document, or this is an application called the Account Value Mapping Platform. It's a platform that we've developed where effectively you can push in any 10Q or 10K. And what it effectively does is breaks down any organization's business strategy into 5 parts: their goals, their drivers, the investments, objectives they're trying to achieve, the benefits or outcomes they're trying to achieve, business changes or campaigns are running, and then lastly, the enabling changes or projects. So here, we're going to get a really deep insights into basically what's going on within Tesla and maybe understand why they decided to cut those prices the way they did at the beginning of this year. So first and foremost, the mission for Tesla is to accelerate the world's transition to sustainable energy. Again, just really quick note on that is you notice that it's not just about electric vehicles. Electric vehicles is a means to an end for that mission. They're making heavy investments not only in their storage business, but also building proprietary batteries and the process by which they're created, and also what they can actually do. And we'll talk about what they're doing in terms of R&D here in just a second, but it's important to note that Tesla's mission is not just about building cars, it's about helping the entire world transition to sustainable energy. And the cars are just a means to an end in that respect. We also see that they talk about their future growth and success is dependent on their consumers' demand for electric vehicles, and specifically their vehicles in automotive industries that is generally competitive, cyclical, and volatile. One thing interesting to note here is that they actually specifically call out the importance of the Model 3 and the Model Y and the industry or the sub vertical that they exist in. So here they say, hey, for example, the Model 3 and Model Y face competition from existing and future automobile manufacturers in extremely competitive entry-level premium sedan and compact SUV markets. The reason why it's really important to call that out is because Tesla understands that even though they've had great success with the Tesla S and even the Model X, the Model 3 and the Model Y, the subcompact and smaller SUV market is really where they're trying to gain the most market share. And you could argue they have the most competition from all the other manufacturers out there. That is the market that is seemingly up for grabs here. And Tesla knows that they will not be considered the first organization or the first company for people as they look to enter that market. So based on these goals, what is Tesla actually doing? What investments are they making to achieve this goal? So let's take a second and just talk about a few of those investments. So first, they're talking about they're currently focused on increasing vehicle production, capacity and delivery capabilities, improving and developing their battery technologies, which we talked about, improving their the FSD capabilities or their self-driving capabilities, increasing the affordability and efficiency of their vehicles, bringing new products to market, and expanding their global infrastructure. There's a lot here, but it's really important to kind of break that down because that does give us some insight into like how Tesla is thinking about breaking into those markets, specifically the Model X and the Model Y competing. And the key word here is affordability. Tesla is spending an incredible amount of investment, or is making an incredible amount of investments in creating these gigafactories that are efficient and able to produce vehicles in the most cost-effective manner, frankly. My belief is that and we'll talk about this here more in a second, as more of these gigafactories come online, I believe they got one in Shanghai or in China, They've got one in Berlin, they're building one in Texas, and there's a few others we'll talk about as well. All these gigafactories are going to be absolutely key to building cars in the most cost-effective manner at a high quality and capacity, which then ultimately allows Tesla to produce these vehicles that are affordable for people that ultimately they'll take the same budget that they would for an ICE vehicle. They can now apply towards a electric vehicle. So let's keep going here and talk about what else is going on in terms of their investments. They talk about their ability to increase production of their vehicle on a sustained basis, make them affordable globally by accessing local supply chains and workforces, and streamline delivery logistics is dependent on the construction and ramp up of their current and future factories. Again, a lot of here betting big on the efficiency and how quickly they can build these factories. Additionally, they talk about the design, develop, manufacture, lease, and sell high-performance, fully electric vehicles, solar energy generation systems, and energy storage products. This is a huge part of, obviously, Tesla's business strategy. They're not betting the whole farm, if you will, on just the vehicles. That is, however, creating a lot of cash for them to basically invest R&D into these other areas, which they feel is really the future, for Tesla and their place in the world. A couple other things I'm just going to talk about is they're focusing the manufacturing capacity, which includes ramping the production vehicles to their installed production capacities, as well as increasing production rates and capacities at their current factories. So again, in addition to building their new factories, they're looking at making their existing ones as efficient as possible as well. So now, we know what the investments are making. Let's talk about the things that they care about and what they're trying to basically drive in terms of outcome. So they want to improve gross margins, they want to improve automobile sales revenue, they want to improve vehicle performance, they want to decrease production costs, increase affordability, and then lastly, improve production capacity. Increasing affordability, interestingly, for a car manufacturer is something you typically won't see as an outcome that they really care about. But Tesla really is using affordability as its own measure of success within the market. And we'll come back to that here in just a second as we talk about specifically the campaigns they're running to kind of basically achieve that. So now let's talk about some of the campaigns or the business changes they're making. Okay, so first off, during the first quarter of 2022, they achieved 3 operational milestones, which helped them basically aggregate and catch up to $11 million of expenses. And that's pretty impressive. Construction progress is primarily composed of construction gigafactories in Berlin, the gigafactory in Texas, Shanghai we talked about, and also retooling other manufacturing plants. So you can see already that they are making an incredible amount of progress in their gigafactories, and that really is their means of betting the farm, if you will, about what they can potentially produce a vehicle for in the future. And guys, this gives a little bit of insight into why they would make those price cuts as early and as swiftly as they did. They also talk about the reason why they've been able to achieve some of these revenues. They say there was an increase in production of Model X and an increase in combined average selling price of the Model S and Model X with a higher proportion of Model X sales. So the Model X is actually helping bolster some of that revenue. But now let's talk about the real reason as to why we feel, or at least I feel, the Model 3 and the Model Y, their prices were cut so drastically. So here they talk about their success will depend on their ability to continue to expand their sales capabilities. We are targeting with Model 3 and Model Y a global mass demographic with a broad range of potential customers in which we have relatively limited experience projecting demand and pricing their products. So let's talk about this for a second, because this is a big deal. So they themselves have said, look, the Model 3 and the Model Y represent a gigantic demographic that we care about, and we relatively don't have a lot of experience, both in terms of pricing and actually playing it, right? Then they talk about, finally, the target demographic for our vehicle, particularly Model 3 and Model Y, are highly competitive. Sales of vehicles in the automotive industry tend to be cyclical in many markets, which may expose us to further volatility. So here you can basically see that they are already looking at understanding that there is a huge threat that they're facing with this market, And then lastly, our cost reduction efforts and additional localized procurement and manufacturing are key to our vehicles' affordability. And for example, have allowed us to competitively price our vehicles in China. So you can see already that they're looking at their own production costs as a means to pass on those savings to customers. So what's interesting again is when you look at all these different things, at the end of the day, what it really boils down to is the fact that bringing a fairly inexpensive product to market for the mass market consumer was always the goal of Tesla, and is a way for them to measure their own success. So again, you can kind of see, if you read the tea leaves, it's not now as surprising to understand why they would make those price cuts. Ultimately, I believe it's a combination of a lot of different reasons. Obviously the biggest being that they're going after a demographic and market that they currently don't have a lot of market share in, so they actually definitely want to increase that. They're also making huge bets in their gigafactories and the efficiencies in which they operate, both new ones and the existing ones. So they basically saying that we'll sacrifice profits right now because we know that in the long run, the quantity of vehicles we're going to be able to sell will make up some of those profits. But then we also have these two businesses that are also going to increase, they feel, and they are pretty significantly, both in terms of the energy storage generation and also their other businesses, both in terms of financing and in providing services for those vehicles as well. If you ask me, I think this is a brilliant move. Yes, it absolutely does upset a portion of the customer base, but frankly, it doesn't upset the base that they care about the most, which is these younger, more, I'd say, budget-minded or constrained consumers. So if you combine that with the government credits that are being rolled out currently, really it makes a no-brainer for someone to pick up a Model 3 or a Model Y, given that basically it's the same price as what you'd expect to pay for an ICE engine, but now you're getting the greatest technology, and you're going to be able to kind of ride this kind of trend around the EV space, which is only going to grow from here. So with that, I just want to say thank you for listening. Hopefully this was useful. If you would like to check out the account value mapping platform, we are going to make it available as a beta early February. I'll provide a link for you to sign up. You can go in here and upload any 10K, any 10Q, any document, and you can gain some of these insights, just like I did in a matter of seconds. Thank you again. Have a great day.